Good morning, students. Happy Diwali to all of you. I believe you must have studying very hard during this Diwali also, and you are all safe and must be enjoying the festival also. So I'm C. Ankit Sharma, again, your income tax faculty for the next topic, and that is income from house property. We have two sessions for this topic. So it's today and the day after tomorrow, that is on 16th of November. So we will complete income from house property session in two sessions, of course. And today will be the theoretical part as well as the numerical part. And we will going to solve all the questions in your study material, including your test, your knowledge. There must be, of course, an MCQ also. But before starting that, as usual, there are some rules. Those who actually joined the class first time, I request all of you kindly follow the simple rules for the class. Of course, these are the guidelines you can see. So there are notes as based on study material issued by ICAI. Provisions are we are studying for assessment year 24-25. The examination, those are going to be held in May 24. For that, we are discussing the provision that is for assessment year 24-25. You can ask any query anytime, but we are going to answer. I'm going to answer all the queries after 30 or 40 minutes of lectures, of course, to maintain the flow of the lecture. Please focus during lecture and ask queries related to topic. Please ask your queries which are related to our topic only. Please try to take live lectures for better understanding. Kindly download notes before lecture for better understanding. I have already uploaded the notes yesterday. So kindly, you must have downloaded the notes, I believe. We'll take MCQ tests, of course. And if anyone wanted to ask any query in Hindi, he or she can ask that query in Hindi. I will answer that query in Hindi. Everything else will be in English. And of course, we have a story also. The story is going to be in Hindi only. So again, a very, very good morning. Suprabhat, Suswagatam. Kem Cho, Vanakkam, Sasriyakal, Subha Bakhair. So Kasakai or a lot of good morning wishes are here. Mohammad Sohail, good morning. Mamta, good morning. Gaurav, Sangeete, Ramadevi, good morning. Ajay Chauhan, Hardik, Kadambari, Manohar Yadav, Rachna, Vandana, Harinder, Parth, Swati, Prakash, Tanishka, Shreyas, Saurav, Madhav, Gopinath, Prince, Mohammad, Anmol, Kirat Nawal, Avantika, Vandalamani, or Kal Totra and Ekta Mishra. So again, a very good morning to all of you, and I welcome you all in this session. And today we are going to discuss, today we will be discussing the provision regarding income from house property. In our last lectures, we have discussed the provision regarding salary, and salary is a huge topic. You must have gone through the provision again. And during the class, you also must have noticed that it's a huge topic. It includes, it consists a lot of things like allowances, basic salary, arrear of salary, then relief provision related to arrear advance, then perquisites, then compensation. They are separate topics, and they individually includes a lot of topics with themselves, like gratuity, pensions, retrenchment, leave encashment, VRS, provident fund concept, allowances. We have multiple allowances, we have multiple perquisite, we have deductions also. And again, on all of the above, the old tax regime and the default tax regime and the optional tax regime concept also try to confuse us. But as I asked you in the last class, kindly make a sheet, on a single paper, write down those allowances, those perquisite, those compensation, those provisions which are not allowed under the default tax regime but allowed under optional tax regime. It will really help you to understand the provision more clearly and easily also. So today we have a thought for the day. Before starting the class, we have a thought for the day, and it says, the best way to predict your future is to create it. Of course, there is no shortcut, there is no elevators, there is no lift to reach the goal of your life, to be successful. So you have to take the stairs. And the best way you can predict your future, you all can predict your future by whatever you are doing today. So whatever step you will take in present, that will create your future. So if you want to have a good future, if you want to have a relaxed life, if you want to have a luxury life with reputation, with recognition, with money, etc. So you have to work hard from today. So you can predict, any one of you can predict your future. It depends how you are going to create it. Clear? Moving on to our notes. I have uploaded the notes yesterday. I believe you must have downloaded the notes. And this is income from house property provision we are going to discuss from today. In our 2 sessions, we will complete this provision, and in comparison to salary topic, income from house property is easy in every way. In comparison to provisions, it's easy. In comparison to the length of the topic, it is easy. Technically, salary was a huge topic, but in comparison to salary, income from house property, relatively very, very simple topic. And you will feel it when we will read the provision regarding it. And one more quotation: if there is any problem in your life, the solution lies only you are the person who can solve it. You should not depend upon others. Others can help you, but finally or ultimately you have to fight. You have to find the solution of that problem, whatever you have in your life. So income from house property, section 22. The charging section of income from house property is 22. So we are going to discuss provision from section 22 till 27. So what was the charging section of salary head we have gone through in our last session? Who is going to tell me the charging section of salary head? Let's see who is going to answer. Notes are uploaded. I have uploaded it yesterday. Do not worry, you will find them a little later because it takes time to be uploaded on the portal. But I have uploaded the notes yesterday. Do not worry. So what were the charging section? What was the charging section of salary head? Kindly send me your answer. Rama Devi is asking provision is did stipend also a salary, sir? I have already answered this question, and that is related to our salary topic. But technically, if there is a relationship of employer and employee, then you can call it salary, you can call it stipend, you can call it wages, whatever it is going to be treated as your salary income. So Miss N. Mary Lynn Sobin is saying section 17, Mohammed Suhail is saying 15, Priyanka is saying 17. The correct section is charging section is 15. For salary head, charging section is 15. In the same way, under income from house property, the charging section is section 22. So what we are going to discuss in income from house property, it says if you have a building, this is our building, clear? So from a building, we can directly earn 2 kinds of income from a building. One is annual income, which we can earn via let out it. So if you have a building and if you are going to let it out, then you can have an annual income, what we call it, that is a rental income. Clear? So if you have a building, you can directly earn 2 kinds of income out of that building. First is to let it out. So you will get your rental income, which will be an annual income. You will earn it annually. One is you can sold it. That will not be going to be your annual income. That is going to be your one-time income. You can have an indirect income also via your building. If you have a building, you can have indirect income also. That means the building can help you to earn your income. So in that way, your building is technically going to help you in earning some other kind of income. So that can be earned income indirectly for if you use that building as in your office, business office, or your factory, or your godown, etc. So in this condition, your business will earn income via sale, etc. But your building is just going to support it. So technically, that is your PGBP income. That is income from your profit and gain of business and profession. So that is your business income, but your building is not directly involved to earn that income. You are using a building as your factory, you are using a building as an office, you are using your building as a godown. But technically, the income is earned by selling a product, but your building is a part of that. So technically, those kind of income fall under PGBP. That means profit and gain of business and profession. That is it. That is our next head, what we will discuss after income from house property. But directly, you can earn income from a building annually. That means to let it out or to sold it, if that building is your asset. So if there is an annual income by letting it out, that rental income will fall under income from house property. Clear? You can see it. I have made a diagram already. So income from house property says if there is a building which is your asset and you can earn directly two kinds of income out of this building. First is to let it out. If you let it out, you will have your rental income. That means your annual income. That will fall under chapter income from house property. So under income from house property, technically, we are going to discuss mostly those income in which your building is your asset. And if you let it out, you will get some income. That will be your income from house property. And if you are going to sell it, then the sale proceed will be your one-time income. That is going to be for under income under the head capital gain. Clear? So that is another head in which we will discuss the provision, whatever income we get out of selling of a asset, that is going to be treated under income from capital gain. But in this head, we are going to discuss the provision that is regarding your rental income. Indirectly, you can use business as in your office, factory, godown, in which you will get directly by selling some product or providing some services. That will fall under PGBP, in which your building is going to just support the income. It is not the income which is directly earned by that building. Clear? Now, if your building is your stock in trade, in this we were discussing, we are taking building as an asset. But suppose if your building is your stock in trade, then if you sell it, like builders, so whatever income you will have after selling that stock in trade, that will going to be fall under PGBP head, business head. But if you let out that property, that is going to be taxable under income from house property. So generally, if you have an asset, you're building as an asset, then the income will fall under income from house property. But there is an exception also that if your building is your stock in trade also, and even if you are going to let it out, then that income can also be included under the head income from house property. So it's just a overview of the chapter. So I was just trying to make you understand that in this topic, in this chapter, we are going to discuss the provision regarding a building. If it is let out, then the rental income will fall under section 22 with the help of provision of section 22 till section 27. One by one, we will discuss the provision, all these things. So income from house property, chargeability section is 22, as the chargeability section of salary was section 15. And it says the process of computation of income. The process of computation of income under the head income from house property start with the determination of annual value. Annual value means the value you are going to earn annually of the property. The concept of annual value, how to determine the annual value, etc., is going to be discussed in section 23. The annual value of any property comprising of buildings or lands appertaining thereto, of which the assessee is the owner, is chargeable to tax under the head income from house property. Now, if it in a simple way, in a simple language, if we need to understand this provision, so these are three major points. So if there is anything which is going to be taxable under the head income from house property, then these three conditions should be satisfied. The annual value of a property is taxable under the head house property if all following conditions are satisfied. So in a simple way, if these three conditions is satisfied, then the annual value of a building is going to be taxable under the head income from house property. The condition number one, it's very simple. It says there should be a building. We are not talking about the land. We are talking about a building. So there must be a building first to include any annual value under income from house property. Vacant plot is not as building, of course. So if any rental income has been earned out of a vacant plot, that is not going to be taxable under income from house property because there is no building. So there must be a building, there must be a land appertaining thereto, there must be some structure which has been constructed upon any land. Clear? So first condition, if there should be a building. The second condition, the person who is taking the rent, the person who is earning that annual value, either via owner or a deemed owner, as per section 27. So what is the meaning of deemed owner, that will be discussed in detail in section 27. So if there is a building, and you are earning some income out of it, but you are not the owner, not even the deemed owner, in that case, then rental income cannot fall under income from house property. So condition one, there must be a building. And out of that building, whatever annual value, that means rental income, is earning by Mr. A, suppose. So Mr. A should be either owner or deemed owner under section 27. What is the meaning of deemed owner? I've just told you that we will discuss the detailed meaning of deemed owner under section 27 later. So condition one was this, condition two is this. Now the last condition, it says the property, that building should not be used by the owner or the deemed owner, of course, for the purpose of his business or profession. That building should not be used by that person for his business or profession. Like if that's a building, you are the owner or deemed owner, but you are using that business, using it for your business, like an office, like in go down, like a factory, etc. In that case, the treatment will be under PGBP head, not under income from house property. So there must be a building. Clear? Simple. You must be the owner or deemed owner. Clear? And that property, that building should not be used by the owner or the deemed owner for the purpose of his business or profession. His business or profession. So if you are using any building for your business as an office or as a godown or as a factory, etc., in that situation, income from house property provision will not be applicable. Then in case of PGBP concept will be applicable. Clear? Suppose Let me ask you a simple question after charging section 22. There is a building. Mr. A is the owner of that building. Mr. A let out that building to Mr. B, and Mr. B used this building as his factory and pay rent to Mr. A 1 lakh rupees per month. So Mr. B using this property for his business. So this 1 lakh rupees is going to be taxable under PGBP head or income from house property? Kindly answer. The question is very simple and clear. We just discussed the charging section 22, and as per charging section 22, there were 3 conditions. So on the basis of condition number 3, I am asking, if there is a building owned by Mr. A, he let out this building to Mr. B for business purpose. Remember, for business purpose, and getting a rent of 1 lakh rupees per month. Mr. A is getting the rent. So will this rent is going to be taxable or chargeable to tax under PGBP head or under income from house property? You have to answer this question on the basis of section 22 we just discussed. Kindly answer, house property or PGBP. Let's see. Ms. Deepika is asking, I have one question in salary, sir, for illustration 25. Can you please say on what slab the tax has been calculated? Because I tried doing with different slab, but I was not able to match with the same slab. So I have to find my notes regarding the salary, illustration 25. Let me see. If I'm able to find the notes right now, I'll give you the answer. Else I will give you the answer in next class, day after tomorrow. Illustration 25, where it is. Kindly mention the page number, because that will be really easy for me. Right? Next, Mr. Martin is asking, sir, suppose the house rent is paid monthly, that income, yes, it's exactly, it is annual income. If you are paying it monthly, does not matter. It matters if you are getting any income regularly. That means annually, whether it's for some month or whether it's monthly or it's a lump sum payment. But if you are getting the rental income monthly, it's technically annual income. If you are getting a lump sum for the whole year, exactly, it's a annual income. Okay, so Miss Santhige is saying PGBP. Okay, Prince is saying house property, PGBP, house property, income from house property, house property. So the correct answer is income from house property. Well done, all those who have given the correct answer. High five from Wi-Fi from my side. That will taxable under income from house property, because charging section said you should not use that building for your own business. The language says he should not use that for his business or profession. So owner should not use that building for his business. But if it let out the building, it does not matter that the tenant use it for business or residence or any other purpose. If you are getting rent, then it will be income from house property. So that is going to be taxable under income from house property if the owner or deemed owner use the property for his business. Then it will be your business income treatment. You all might having some question in your mind right now. It can be like this, that suppose we have a big property, ground floor, is for using for own business. This floor is used as residential purpose. And this floor is using for let out. Then what will happen? Then what will happen? Or might be this kind of question that we have a house, one room in this house, practically it happens, is let out. Other part is used for own business. Then what will happen? We have this question might be also in your mind right now, that we have 50% house is let out, 50% house is used by own residents. Then what will happen? These might be kind of question you must be thinking, or you might will think after 10 or 20 minutes when we will start the provision. So all of these kind of question, if these are coming in your mind or brain, that means your brain is working perfectly. Congratulations, you all your all brains are working, and all the system of your brains is working perfectly. That should be come in your mind. Of course, these kind of queries should be there, but do not worry. We will discuss each and every these kind of query one by one, because we are just in the starting phase of this income from house property. So these kind of treatment will be in the numerical part. First of all, we are just making a base for the basic concepts for the introduction part of house property. So these kind of queries, if these kind of queries coming into your mind, that is means your brain is working perfectly. Ekdam perfect. Fine. But I'm not going to answer these kind of queries, and you should not ask also these kind of queries. We will discuss each and every query. All your doubt will be cleared when we will reach our numerical part. So whatever I say, just focus on that topic. One by one, I will take all the problem, all the queries, all your doubts will be cleared. So just do not run faster than me. Just stay with me. We will solve each and everything. Clear? So moving on to the notes again. So that was charging section 22. In simple words, there must be a building. You should be the owner, deemed owner. It should not be used for his business or profession. Kindly highlight this word. Kindly remember this word, his business or profession. House property in London. I wish I could have that. Okay. So what is the provision if you have a house property outside India? So the concept says you must have gone through the provision under residential status. There is a concept of ordinary resident, resident and ordinary resident. There's a concept of resident and not ordinary resident. And there's a concept of non-resident. So if I am a resident and ordinary resident, of course I am a resident and ordinary resident. And suppose I have a house property in London. I wish that can be true. So if I have a house property outside India, then is it going to be taxable as per income from house property under India or not? So that confusion, that query can be solved by the provision. We all know that if we are a resident and ordinary resident, whatever income we earn, wherever we earn income or received, it does not matter, that is going to be taxable in India at least. So in case of resident in India, resident and ordinary resident, in case of individual NHUF, income from house property situated outside India is taxable whether such income is brought into India or not. Because if you are a resident and ordinary resident, then whatever income you earn, whether in India, outside India, wherever you receive that, whether it's India or outside India, or even on Moon or even on Mars, it does not matter. If you are a resident and ordinary resident, then you have to pay tax on all income. Wherever it is received or earned does not matter. And if you are a non-resident or resident but not ordinary resident in India, then income from house property situated outside India is taxable only if it is received in India. So for a purpose of Technically, we can say for the purpose of resident and ordinary resident, if you have an income from house property outside India, it does not matter. It's going to be taxable in India. But if you are a resident but not ordinary resident, plus if you are a non-resident, in that case, your income from house property outside India is going to be taxable in India only if the rent is received in India. If the rent is not received in India, then that house property is not going to be taxable in case of resident, not ordinary resident, and non-resident. I hope it's clear. Okay. Clarification, there are some important clarification. The first clarification I have discussed you already. It says if property is held as stock in trade. So if your buildings are stock in trade, that means you are a builder. Then whatever income you earn after selling that buildings, that will be going to be taxable under PGBP. But the rental income from those buildings will still going to be taxable under income from house property. Clear? Examples also here. Now there is a concept of composite rent. Composite means mixed. Composite means mixed rent. So what is this composite rent or mixed rent? Let me explain you. When you live in a society, your flat society or you have a building, then if there is a society, then generally what happens, you took a property on rent in a society. And the rent is rent for building, for that flat or that building. Suppose 20,000 rupees per month. And there are some facilities, amenities, benefits has been provided by that society. Like for swimming pool, the monthly charge they are taking 500 rupees per month. For electricity supply via generator or inverter, they are charging 400 rupees per month. Health club, 300 rupees per month. Lift facility, watchman, gardener, etc. Suppose these are 1,000 rupees per month. So technically, they are asking you society charges also. These are technically called the maintenance charges or society charges. So technically, we are taking 2,200 rupees per month for this also. So total rent paid by us or received by us, suppose 22,200 rupees per month. So now this 22,200 rupees per month is called composite rent. Composite means the rent is mixed for building as well as for society charges. So if in the question this 22,200 rupees has been given as a composite rent and this details has been also been given, in that situation, this will fall under income from house property. And this 2,200 rupees is going to be taxable under income from other source. So this part of facilities, charges, etc. will not going to be taxable under income from house property. So the building rent part is only going to be taxable under income from house property. Suppose the problem is this. If in the question it has been given that there is a composite rent of 24,000 rupees for flat and facilities, and there is no bifurcation has been given, there is no separate information has been given that how much is related to the flat and how much is for facilities. So if there is no bifurcation is given, then this full value is going to be taxable under income from other sources. Nothing is going to be taxable under income from house property. So the concept, the provision says if there is separate value has been given for flat and facilities, flat rent will be taxable as per income from house property provision. Facility is going to be taxable as per other source or PGBP. Depends upon the situation. If the rent has not been given separately, then the full value is going to be taxable as other source or PGBP. Nothing is going to be taxable under income from house property. Clear? So in case of composite rent, we can see where owner charges rent including charges for other amenities, benefit, facilities, same things. If such rent can be split up into two parts, one for house property, another for other amenities, then charges for house property will be income from house property, another will be income from other source. But if such rent is not separable, remember, if that rent cannot be separate, then the whole such rent will be income from other source. The third note is my favorite note. It's a very, very interesting notes. We are discussing the provision regarding income tax. Clear? So what if there is no income? If there is no real income, can there be tax? So generally we will answer it no. If you do not have any real income, there would not be any tax. So income tax will be applicable if there is real income. Clear? Exactly. But under income from house property, there are two circumstances in which there can be income on the basis of notional basis. There will be income taxable on notional basis. Notional basis means deemed basis, which is not real, assumption basis, even when there is no real income. So under income from house property, there are two circumstances in which there will be taxability under this head on the basis of notional income, not on the basis of real income. These are technically the numerical part, but for time being, I am just giving you a hint. But exactly why it happened, how we need to calculate it, that will be discussed in our numerical part. So let me give you a hint what exactly we are talking. So under income from house property, here's a concept which says if you have two house properties, and you did not let it out, that means there is no real income from these house property. You are using those house property for yourself. Self-occupied. We called it self-occupied. If you are using any house property for your own residential purpose, for your family purpose to reside, we called it self-occupied under income from house property. So this word we'll be discussing again and again. So what is the meaning of this word? This means if you are using any property for yourself or your family to reside, that is called self-occupied. So if Mr. A has two house property, one he used for his self-occupied, the other is vacant, not let out, it's just a vacant property. So maximum two properties, if you have maximum two properties out of which you are not getting any income, clearly Mr. A does not earn any income out of these house properties because in this property he resides with his family and this is vacant, so there is no real income. So income tax say okay, if you have maximum two properties for your self-occupied or vacant, we would not charge any income. Technically there is no real income, so income tax is not giving you any benefit, but he just said that we will not charge any tax on it. But if you have more than two house property, this is self-occupied, this is vacant, and this is vacant. Now, if you have more than two house property, and that is being used for the purpose of self-occupied or only vacant purpose, you did not let it out, you did not use it for your business, you just wasting your properties. So you might have let it out to someone else, so he can have a house, you will have an income, and government will have its tax. But if you did not do this, so for two properties, government will not take or not charge any tax on it. Government will assume that income is nil. But if anyone in our country having more than two house property, and did not let it out, then the third property will be treated as deemed let out. That means here is no real income. Still, we do not have any income out of these three properties in real. But income tax will assume this house as let out. That if this property is being let out, then what is the rental value we must have? So the market rent, suppose 2 lakh rupees per month of this property. Even we do not earning any rent out of it. Even government will calculate tax upon it on the basis of its market value. That's why it's called deemed let out, which is not really let out. So my rental income for the year will be almost 24 lakh rupees. On the basis of that, tax will be charged. So you can see in this case number 2, what is our real income out of these property? Real income is 0. But there is now notional income, assumed income, which is 24 lakh. And on the basis of income from house property provision, tax will be charged upon this value. So there is first example in which we can see that if you have more than 2 house property in our country and it is not let out, it is not being used for any business purpose, etc., then it's going to be taxable as notional taxability basis. First example was that if you have more than 2 house property. The second example says, suppose now you have 2 properties, one is self-occupied and one is vacant. So taxable value will be nil. But suppose now you have 3 house property. One is self-occupied, vacant and vacant. So now these 2 value again will be nil. But government will charge this house property as deemed let out. So what you did, you let it out actually for 1 lakh rupees per month. So out of these 3 property, now your real income is 1 lakh rupees per month. Clear? But suppose what? The market rent, what we call is fair rent. The market rent means the fair rent. Fair rent of this property was 1,50,000 per month. But you let it out on 1 lakh rupees per month. So income from house property says again, this is a loss to our country. You can charge for this property 1,50,000, but you are just charging 1 lakh. So your income will be only 12 lakh, technically real income. But you could earn 1,50,000, that means 18 lakh. So we will tax the higher value. So 1,50,000 is going to be taxable for 12 months. My rental value will be, as per income taxes, 18 lakh. So you can see now 18 lakh is going to be taxable, but my real income is only 12 lakh. So 6 lakh is going to be taxable as notional basis. So under income from house property, even if you are letting it out the property, and if it is the rental value is less than the market rent, then the balance value, the higher value is going to be taxable. So in this situation, 6 lakh will be your notional income basis taxability. So there are 2 main concept in case of house property. One, if you have more than 2 house property for vacant or self-occupied, then only 2 will be treated as nil. The balance will be your deemed let out. And on the basis of that, you have to pay tax on notional rent. The second situation, if the market rent is higher than your real rent, then the difference is taxable as on the basis of notional rent. Clear? You will be understand these provision very easily when we will discuss the numerical part of this. For time being, I explained to you what is the meaning of notional income and what is exactly notional income and how the notional income arrive. So these are 2 circumstances. Case A, when assessee owns more than 2 house property, one for self-occupied and one as a vacant, or both self-occupied or both vacant. The annual value of both house will be nil. Any other house income, if self-occupied or vacant, shall be chargeable to tax, deemed such house as let out. Clear? The second case, B case, if fair rent, that means market rent exceed the actual rent. In that situation also, the difference is going to be taxable as your deemed let out value. That means notional rent. Note number 4, we will discuss after our numerical topic. It is as a clarification over here, point number 4, but we will discuss this concept. Note number 4, we will discuss after our last topic because it is related to the topics which we yet to cover. Cases where property is not registered in assessee's name, still she will be treated as deemed owner of that property to charge income from house property in his or her name. So technically, this is section 27, deemed owner. In the charging section 22, the point number 2 was saying the building should be, the assessee should be the owner of the building or deemed owner. So what was the meaning of deemed owner? Here we are going to discuss the detailed concept of deemed owner. Let me explain you in simple way all the points together. If the property is not registered in your name, how we identify a person is the owner of any property or a building? Via registry, the registered agreement. So if you have a property and the registered agreement in your name, so generally you will be treated the owner of that property. Clear? But there are some exceptions in which the registry is in not your name, but still you will be treated deemed owner for the purpose of income tax under income from house property. Why it happens, how it happens, these are the points we are going to discuss one by one. The first one is transfer to spouse. All the points, almost there are 6 points in the definition of deemed owner, and they all are connected to each other. They all have the same kind of situation. Technically, point number 1, 2, or 3, we can say they are almost similar kind of points. So point 1 says, suppose there is Mr. A. His yearly income is 10 lakh rupees. Clear? So he is going tax upon it, of course. Now, he has a building and he wants to let out this building for 5 lakh rupees per annum. So what will happen if he let out this building? Then the rental income is going to be added in his income, which is already 10 lakhs. So in this scenario, this 5 lakh is going to be added into his income. So his income will be 15 lakh. And on this 5 lakh, he is going to pay tax at the rate of 30% because it's exceeding 10 lakh rupees under optional tax regime. Or he's going to pay tax if he is in the default tax regime, the tax rate again upon it. So this 5 lakh is going to be taxable with a higher slab in any way, whether it's a default tax regime or optional tax regime. So what do you think? He's thought that why should not Mr. A has a wife also, that is Mrs. A. She's a housewife. Her income is nil yet. So what Mr. A thought? Mr. A thought, let me transfer this property in the name of Mrs. A. I will register this property in the name of Mrs. A registered legal deed in the name of Mrs. A, and I will show it as a gift. She's my wife, I can gift her. So in this situation, now this rental income 5 lakh rupees per annum will be the income of Mrs. A. And up to 5 lakh rupees under optional tax regime, there is no tax, and very few tax in case of even default tax regime. So technically he is going to pay nil tax or very low tax in comparison to that tax which what he would have been paid if this 5 lakh become the income of Mr. A. So by this mean, he can lower his tax liability. He can technically lower the tax liability of his family by transferring the house in the name of Mrs. A. So to stop this concept, now technically we can say who is the registered owner? Registered owner is Mrs. A. But the income tax wants to curb, to stop these kind of tax avoidance practice. So income tax made a provision under section 27, and it says if any person transfer his building to his or her spouse without adequate consideration. So Mr. A technically give the house to Mrs. A, so there is no technically adequate consideration. Or without divorce, whatever it is. So if Mr. A wants to transfer this house and wants that the rental income of this house will be assessed in the hand of Mrs. A only, then either Mr. A needs to receive adequate consideration from Mrs. A. Suppose the value of this house is, market value of this house is 80 lakh. Then either Mr. A is going to receive 80 lakh rupees from Mrs. A. From Mrs. A, from income what she earned. This cannot be done like this, that Mr. A transfer a 80 lakh rupees check in the account of Mrs. A, and the next day Mrs. A paid that 80 lakh rupees check to Mr. A, and we are saying that's a adequate consideration. No, this 80 lakh rupees should be given by Mrs. A from her own income sources, if it have, from her own income sources. So practically, because she is a housewife, she cannot pay this out of her income sources. So this kind of practice will stop. This kind of tax avoidance will stop. So either Mr. A should receive adequate consideration, or if not consideration, then divorce. Because if Mrs. A divorced, in that situation, the concept of spouse would not be applicable. Now Mr. A, Mrs. A will be stranger. So either Mr. A should receive adequate consideration, then in that situation, this property rent will be Mrs. A income, or Mr. A should take divorce before transferring it or after transferring it. Then that situation, this 5 lakh would not be the income of Mr. A, but will remain the income of Mrs. A. If Mr. A not get any of these things from Mrs. A, in that situation, Mr. A will be called the deemed owner of that property, and the rental income, whatever it is earned, will be part of Mr. A income only. So you might understand why income tax made this provision, to avoid this tax provision. So people will do this, they'll transfer their properties into their relative names, registry in the relative names, and in that situation, the tax can be avoided or tax can be minimized. So in case of a spouse, now this is not possible. First point, in case of transfer of house property by an individual to his or her spouse, you can see, otherwise than for adequate consideration, the transferor is deemed to be the owner of the property. In case if there is no consideration, then you can take divorce, of course. You should not take divorce, of course, but the provision says if you take divorce, then in this situation, this provision can be avoided. In case of transfer to spouse in connection with an agreement to live apart. What is the meaning of agreement to live apart? That technically means divorce. We are talking about divorce. The transferor will not be deemed to be the owner. The transferee will be the owner. So if Mr. A takes divorce, then the transferee, that means Mrs. A will be treated as owner. But if divorce is not take, if adequate consideration is not there, in that situation, house property income is going to be taxable in the hands of Mr. A, because he will be treated as deemed owner. The same concept applicable to minor child. If any person transfer his property to his or her minor child, otherwise than for adequate consideration, The same example we discussed, in which if you skip the provision of divorce, the same concept is applicable upon minor child also. The transferor would be the deemed to be the owner of that house property. So if Mr. A transfer his property to his minor child without adequate consideration, even that in this situation, that house deemed owner will be Mr. A. Exception in case of transfer to a minor married daughter. But if that house property is transferred to minor married daughter, then in that situation, the minor will be deemed owner as well as the registered owner. The transfer is not deemed to be the owner. So we can see there is exception in both cases. In case of a spouse, one exception is divorce. And in the same case, in case of minor child, one extra exception beside the adequate consideration is minor married daughter. If Mr. A gift his house to his minor married daughter, in that situation, this case is possible. Generally, in our country, minor marriage is not valid. But if this circumstances, is there any special circumstances in which, if minor marriage is legally declared by the court, etc., in that situation, if the property is gifted by a parent to his or her minor child, minor married daughter only, not son, in that case, deemed owner concept will not be applicable. Note is very important. Suppose if Mr. A did not transfer the property to his spouse, but he gifted cash or monetary value in the name of his spouse, and out of that money, that spouse purchased a new house property and let it out on rent. This can be done also like this. So for that purpose, income tax has made a provision there also. Whether cash is transferred to spouse or minor child and the transferee acquires property. Transferee means that minor child or spouse out of such cash, then the transferor shall not be treated as deemed owner. Then this deemed owner concept will be stopped, but exactly a similar provision, we named it clubbing, will be applicable. However, clubbing provision will be attracted. So even in clubbing, that will happen, that income from that property will be taxable in the hands of Mr. A. So in both ways, that income is going to be taxable in the hands of Mr. A. Holder of impartial estate. The impartial estate is a property which is not legally divisible. The holder of an impartial estate shall be deemed to be the individual owner of all properties comprised in the estate. So even if this property is registered in some other name, the impartial estate, the holder of an impartial estate means if you are a holder of any property, you cannot sell. You can just be a caretaker for some time. In that case, you will be treated as a deemed owner. Like if there is an HUF in which a member transfers property to the HUF for the purpose of HUF. In that situation, HUF is the holder of that impartial estate. So that will be treated, that HUF will be treated as the deemed owner. And if there is any income of rental in the nature, that is going to be taxable under income from house property. So HUF cannot sell that property because the property relates to the holder of that, the members of that HUF. But that HUF will be treated as the deemed owner of that any property. So holder of impartial estate technically in journal means we can say the property you cannot apart. That means impartial means you cannot apart, you cannot sell it off. You are just a deemed owner. You are just a caretaker of any property. That in that situation, you will be treated as deemed owner. Like in case of body of individual, you have must gone through the provision of definition of person under section 231 in the basic concept. There is individual, there is HUF, there is AOP, and there is a concept of BOI, body of individuals. Technically, body of individuals means a person who is not the owner of any income, but the caretaker of any income. In the same way, if you are not the owner of any property, you cannot sell it off, but you are the caretaker of that property, you will be treated as deemed owner. Clear? Now, person possession of a property. It is a special case. Point number 4 and 5th, they are both interconnected. And the point number 4 and 5th, what we are discussing under income from house property, that is exactly same in the capital gain chapter, what we will discuss in future in the definition of transfer. So this point number 4th and 5th is exactly same under definition of transfer under section 247, which is going to be discussed in capital gain chapter. So what it says, suppose there is Mr. A who has a property, he wants to sell it. He wants to sell this property for, suppose, 5 crore rupees. Now there is Mr. B, who is the buyer. He wants to buy this kind of property for 5 crore rupees. Exactly this kind of property. So Mr. A and Mr. B decided to transfer this property, and Mr. B decided to pay the amount to Mr. A. But Mr. A say, I would not accept anything less than 5 CR. And Mr. B says, I would not pay anything more than 5 CR. So they both meet each other, and you can see it appears, it seems that the transaction would take effect. But there's a problem. When this transaction is going to be happen, so in this case, the one concept which called registry fees, when they go for register agreement, they have to pay stamp duty, almost 7 to 8% in different cases. So technically, almost 35 lakh rupees need to be paid by the buyer. So technically, where Mr. B was saying, I would not going to pay even 1 rupees more than 5 crore. So Mr. B needs to pay extra 35 lakh approximate at the time of registry. And now Mr. A, on transfer of this property, there will be capital gain tax on the seller. Suppose Mr. A sell this property for sale price 5 crore. Suppose the purchase price, just suppose, he bought this property for 3 crore. Then 2 crore rupees was capital gain. And on this, he might need to pay 20% of tax, which will come around 40 lakh. So this is going to be have with the income tax department. That means the government, of course, and this is going to be the stamp duty department. That is again the government. So government will receive almost 75 lakh rupees out of this transaction. What Mr. A was saying, that I would not accept anything less than 5 CR. So Mr. A needs to pay 40 lakh rupees to government as a capital gain tax. So he will receive almost 4.60 crore. So because Mr. B was saying, I would not pay anything more than 5 crores. So technically he needs to pay more 35 lakh rupees. In the same scenario, what Mr. A was thinking, that I would not accept anything less than 5 CR. So technically he's receiving only 4.6 crore. So what will happen? This transaction would not take effect because they both must not agree on this. So to skip this kind of problem, to avoid the tax and stamp duty, a new concept has been formed in these kind of situation. So now Mr. A and Mr. B decided this. Mr. A say, I will give you the possession of my property. Clear? Possession to Mr. B. Mr. B say, I will give you the 5 crore rupees as a deposit, not as a sale. This is the main concept. So Mr. A will give the possession, not the ownership, not transferring the ownership. And Mr. B is giving him 5 crore rupees as a deposit. And there will be a agreement for this, not the register agreement, just the agreement that we will register that property later. Registration or stamp duty or transfer will be done later. This later will never come. So Mr. B wants the property, he got the property as a possession. Mr. A wants the money, he got the money as deposit. But technically, it's not a deposit, it's technically has been sold. But what they just did not went to the registry concept. Because if they are going for the registry concept, they just did a mutual agreement, but there's no registered deed. So there would not be any stamp duty. There would not be any registry in the name of Mr. B. And there would not be any capital gain because there is no ownership transfer. Capital gain will be applicable when there is ownership transfer. So Mr. is technically still the registered owner of this property. Registry will be still in the name of Mr. A because there is no registry or ownership has been transferred yet. But Mr. B got the house, what he wanted. Mr. A got the money, what he wanted. Government did not have anything. So technically this 75 lakh rupees lost to the revenue of the government. So in this situation, income from house property charging section 27 says, even if registry is in the name of Mr. A, but if there is possession, condition 1 fulfill, if there is consideration transfer, and if there is a normal agreement exist, we will treat Mr. B as a deemed owner. So any income in future via rental, if earned out of this property, that will be charged in the hands of Mr. B. So technically income tax, suppose that for the purpose of income tax, the owner is Mr. B. Why I was saying that this concept is also in the capital gain chapter, because under capital gain, government assume now these kind of agreement as ownership transfer. Government say, do not go for registry. Okay, don't go for registry. We will assume these, if these three conditions fulfill, we will assume it as a transfer and ownership gone. So you have to pay stamp duty also and capital gain tax also. So this kind of practice has been curbed now. I'm just telling you because in capital gain topic, we will discuss the concept of capital gain in these kind of situation. For time being, we are just discussing regarding the house property concept. So because Mr. B will be treated as deemed owner even without registry. So this is the concept where we are discussing even without registry. How can someone be treated as the deemed owner? So that is case number 3. Case number 4, sorry. Now case number 5 also, it's almost same situation. Suppose there is a Mr. A, or there's a company, or there's a society, not Mr. A, society or company. Society has a property, it wants to sell it on 5 crore rupees. Suppose there's Mr. B who wants to this kind of property for 5 crore rupees. Now again the problem arises, if this is through a normal transaction, they have to pay income tax and stamp duty also. If they transfer the possession and consideration and the agreement, then again it is treated as transfer in the point number 4. So Mr. B will be the deemed owner and capital gain also charged. So that kind of scenario has been closed. So they find a new way to avoid the tax. Society says that we will provide membership to Mr. B, or company, we will make Mr. B as a shareholder and provide him membership. And in respect of this membership fees is 5 crore rupees. We will take 5 crore rupees for membership, and those who will be our member, we will provide a house to them to just as a possession, not the ownership transfer, to use as a member only. So technically there is also intention of transfer. Just to avoid tax, they say we will take membership fees and we will give a house to our member to use, generally use. We are not going to transfer it. So again, in this situation also, now registered owner is still society and a company, but income tax treated deemed owner Mr. B. After this point, we will discuss the queries. Deemed owner Mr. B, and this will treat it as a transfer also. So this point also covered under capital gain chapter. So that's why I was saying, because point number 4 and 5, they are connected with capital gain topic also. So for point number 4th and 5th in house property, we have to understand that Mr. B will be treated as deemed owner even if he is not the registered owner. The last point is deemed owner, point number 6, that we will discuss after taking our query. So point number 4 theory, you should read it. Point number 5 also regarding the member of a cooperative society. Point number 6 left. And then we will resume our numerical topic. But before that, let's take the queries. Just a second. Let's see. Okay. Okay. You have given a lot of answers regarding the question I have asked regarding composite rent. Okay, Miss Pooja is asking, if a businessman let out his property to his own employee, then it would be chargeable under which head? If that businessman is getting rent for these property, that will be income from house property. But if the business is in the nature of only letting out of the property, is the nature of that his business is only he's involved in the business of letting out his property, then that will be your PGBP income that we will discuss in this provision also. But as per your question, that will be your income from house property if you're charging rent of it. If you're providing it free, then it is a perquisite in the hands of employee. Next is Ramadevi. In case of a firm, A is also a partner and he letting out. Yes, it is the income from house property. You are correct, Ms. Ramadevi. Well done. Okay. Miss Aishwarya Roy. Aishwarya Roy? Okay, Miss Aishwarya Rai. I thought it's Mrs. Aishwarya Rai. Okay. So, sir, will security deposit received with rental amount is taxable under house property in the relevant year? Look, security means something which is going to be refunded. Security is not an income of any person. If I am receiving any amount as a security deposit, that means it's my liability. It's not my income. It's a part of our balance sheet, liability side. So any security deposit, if it is not refundable, suppose if it is not refundable, then it will be your income under house property, etc. But generally the meaning of security deposit means it's always refundable. So that is not income. It would not come in any head of income. Okay. Next is resident. Okay. I feel so good when students are answering the question. When I ask in the any question in the topic, but you are sending your queries, your answer automatically, even when I am not asking. That really makes faculties proud that you all are involved in this. So thank you so much for this kind of participation. Okay, I really appreciate that. Okay, and Mole is asking, sir, if two houses is on the name of assessee, but third house is on the name of other family member of assessee. You asked this question before the concept of deemed owner. Now you might have understand that if the third property is in the name of his wife, without consideration, without divorce, then that is going to be deemed let out. Clear? If that third house property is in the name of minor child, except minor married daughter and without consideration, educate, then it will be a deemed owner and deemed let out. But if third house property is with the name of his major child, whether it's gifted, in that situation, that is not going to be deemed let out because that property will be treated as the property of his major child. So this exemption will be claimed by the major child for himself. So that will not be treated as your property. Technically, I can say if you have more than two property, and if you are the deemed owner or real owner of those property, then this notional income concept will be applicable on the third property or so on. Do not worry. We will discuss these kind of question also one by one. Next. Ruturaj is saying, so there are two deeming concept in house property. Yes, correct. Next is Mamta is asking, sir, when the house property is vacant and we assume to be let out, then how we decide what will be the let out charges and claim deduction? Just have patience. I have told you, these kind of question must be coming into your minds. The queries must be there in your brain, so that your brain is working perfectly. Congratulations, but you have to wait for it. We will discuss these vacancy, these room concept, half portion let out, half portion vacant, how we claim deduction. Do not worry, we have these kind of provision over here. These are the numerical provision. Each kind of this concept will be discussed one by one. We have 7 kinds of numerical cases in our income from house property. We will discuss A, B, C, D, E, F, G. We have 7 concepts in this house property. In these cases, I will take each kind of provision. You would not have left with any kind of provision when we will discuss all these 7 cases. So just relax. I will explain each and everything. Next is, so Mamta, you have to stay with this question. Later, when I'll explain each and everything, because if I'll start explaining these concepts with your queries right now, you might get confused and the others will be confused more. So just the concept regarding how we will solve the vacant concept, how we will say the rental concept, these are the numerical topic that will be discussed soon. Okay, next is Raghavendra is asking, sir, when we mean house property, are we referring to a building with multiple houses or rooms or individual buildings? Each and everything is house. A house with a multiple rooms, also a building. A house with a floors are also a building. Flats are also a building. So these all are buildings. There is no confusion in it. If there is a permanent construction on any land, that is a building, that is a house under income from house property. How we need to treat it, how we need to solve it, those concepts we'll discuss in our numerical part. Next is Miss Pooja, I have answered this. If a businessman let out his property to his employee, that will be income from house property. If there's anything which is your asset or a stock in trade, and if you are getting let it out, that will be your income from house property. If the letting out is not your sole business activity. Again, Swati, okay. Sir, if there are 3 house property and one is used for self-occupied and one is used for business let out and one is vacant, then what is going to be taxable? Just relax, Swati. I just told you. These kind of query will be discussed in the numerical concept. Your question is in our C case. When we will discuss our C case, this kind of question will be answered. If I'll start giving you answer like this, then you might get confused. We have the answers of all kind of these situations, whatever you are thinking. So you have to wait for it. Okay, next is Mohammed Sohail asking, sir, in the case Mr. A direct purchase property name of Miss A, who is a Mrs. M, might be you are asking. Yeah, exactly the same deemed owner concept will be applicable. Whether you gift your property your spouse without adequate consideration, whether you transfer cash or monetary amount in her account and he purchase a property out of it, whether you purchase a property in her name directly, the deemed owner concept section 27 will applicable. If you transfer money in her account, then she purchased the property. In that situation, clubbing provision will applicable. But in what question you asked, in this case, the deemed owner concept will be applicable. Next is Mr. Rama is, sir, if Mrs. A bought house in his own name of his father has given money as a gift. Yes, this is a good question. Very good question. As gift. In that case, also house property would be treated as income of Mr. A? No. No. If Mr. A uh, give the property or transfer the property in the name of Mrs. A. Suppose the value is 80 lakh rupees and Mrs. A transfer money 80 lakh rupees to Mr. A. What she bought from her father. In that case, that will be treated as educate consideration. The amount should not be flow from Mr. A directly, indirectly. That's the condition. If she's taking that amount from herself or her family members, her father, mother, etc., that will be her income. In that case, deemed owner consent will not be applicable. Mrs. A will remain the owner of that property and income will not be included in the hands of Mr. A. It will remain the income of Mrs. A. That's a good question. Okay, Mr. Rama. Ms. Rachana Ramakant, sir, but even if they are not divorced and if the spouse is a homemaker, she would not have any income. And again, the owner himself would have to pay the tax, right, sir? What difference would it make? No, it's not like that. But the tax will be lower. Even if she's a housewife and if this deemed or concept was not there, in that situation, that 5 lakh rupees will be Mrs. A income. If this deemed or concept is not there, what you are asking, the tax need to be paid by Mr. A. There will be no tax up to 5 lakh rupees. There is no tax in our country in optional tax regime. The tax liability will be lower. The basic idea of doing this is this: either the amount till which there is no tax will be transferred to Mrs. A, or tax liability is lower than in comparison to Mr. A. That's why we are doing it. Okay. Next is, suppose market value Muhammad Suhail is asking 80 lakh and Mr. A sold property to Miss A for 50 lakh. Again, that is not an educate consideration. So technically 30 lakh rupees free. So that for the purpose of rental income, that 30 lakh rupees proportionately is going to be taxable in the hands of Mr. A. Mr. Prince asking how a minor daughter can be married. It can be treated as a married as per some judgment of our courts in India. You can Google it. When a minor can be treated as a legally married daughter. So if in that situation, the minor is treated as a legally married, in that situation, section 27 deemed or consent will not be applicable. When it can be possible, you can Google it. You will find out multiple cases where minor marriage can be legalized in our country in some special circumstances. Next is Mr. Prince. If in first case property is transferred by wife to the husband, same concept applicable. The word says spouse. So if Mrs. A is earning real income, Mr. A is a house husband. Clear? And in example number 1, suppose Mrs. A transfer her property to Mr. A, who is a house husband, without educate consideration, without divorce. Even in that situation, deemed or consent will be applicable. Mrs. A will be treated as the deemed owner. So the concept is applicable not on wife. The concept is applicable on spouse. It can be husband as well as wife. Next is Santosh is asking, sir, good morning, have a great day. We want to know wife has any right to the property of father-in-law's house. You should read the provision of Hindu undivided family. In the basic concept class, there is a concept of joint Hindu family and Hindu undivided family. So the faculty must have told you that in case of Hindu undivided family, the daughter-in-law has the membership right on her father-in-law property. So that provision must have been discussed in your chapter number 1. Next is Ms. Pooja, you are asking the same question again and again. I have explained you. Point number 3, that was a impartial estate. Mr. Malepathi Chinmay Venkata Sai. Impartial state means the property for which you are not the registered owner. Still, you will be treated as the deemed owner. So, if you are a caretaker of any building, caretaker, you must understand, in that situation, that caretaker is treated as the deemed owner. Clear? Mr. Prince asking, sir, one question out of topic is your name in Aadhaar card, C. Ankit Sharma. These kind of question, I say, do not ask these kind of question. Fine. Please, these are not our topic related question. Sorry, Mr. Prince. Okay. Devraj asking, difference between possession and ownership means registered agreement in your name. Registry in your name, that is called ownership. Possession means physically you are allowed to take possession. Like a tenant has only the possession of our property, not the ownership. Clear? So that situation is called possession. Legally, to use that property, that is called possession. But ownership means you can sell that property, you are the owner of that property. It's a very simple terms. Sir, please upload this notes once again as you have write important points on it. Do not worry. I have all chart presentation also prepared for you. I have uploaded the chart also yesterday or tomorrow. Do not worry. Fine. Next is employer receive house from employer. Income from which source? Mr. Prince, what you are asking? Employer receives house from employer. The wrong question. Next is Swati Krishna saying transfer to spouse without educate consideration, then the transferor is not deemed owner. Transfer to spouse without educate consideration, then the transferor is deemed owner. Transferor means the person who transferred, Mr. A. If transfer his house to Mrs. A without consideration, Mrs. A is a transferee and Mr. A is a transferor. So Mr. A will be treated as the deemed owner automatically. Your question might be you are confused. Next is Mr. Prince. Okay, now Mr. Manohar Yadav. Sirji, if I use my property in business, then whatever be my notional rent can I deduct as expenditure that will be discussed in business head. But for the timing, I can tell you there is no concept of notional tax deduction. There's a concept of notional tax income because the benefit of income tax department. But there is no concept of notional rent deduction. You cannot do that. Okay. Pooja is asking, sir, if property is transferred to major married daughter, then exemption will apply or not? If property is transferred to any major child, whether married, not married, son or daughter, if the property is transferred to major child, then there is no concept of deemed owner. Major child is equivalent to a stranger. If you are transferring your property, your friend, your any relative other than spouse or other than minor child to anyone, major child, your cousin, your brother, your parents, your friends, your relatives, other than anyone, then there is no concept of deemed owner. Even if you are not taking any consideration, those will be treated as the owner and deemed owner. There is no concept of deemed owner. The deemed owner concept is only applicable if you are transferred it to your spouse without consideration divorce or your minor child without consideration or your minor married daughter. Other than these two persons, if you are transferring your property to anyone, they will be liable for tax on house property income. They are owner, they are deemed owner. Transferor would not be treated as deemed owner in any situation. Okay. Swati asking, the question is silent about those. No, it would be silent. It will speak. Do not worry. Then the question in the examination, it will be written that you have to solve it as per old tax regime. That means default tax regime or the optional tax regime. Okay. It will be mentioned over here. Even if it's not mentioned, that write a note and solve as the way you want. Okay. Next is Anirudh. The deemed owner should also have to pay. Yes, the deemed owner for the purpose of income tax will be treated as the real owner. And all the tax liability of that property under income tax will be paid by that deemed owner. So what all are actually considered as adequate consideration? Adequate consideration means the market value of that property. Okay. Mr. Keshav saying point number 4 and 5. In this case, we can say that possession is transferred through general power of attorney. Yes, exactly. Correct. Manohar is asking, Sirji, suppose I have vacant land and I charge annual value to one of my friend for make tent house on it. Then it is taxable. If you have vacant land and if you're charging rent for that vacant land, and it does not matter for what purpose the other person is using it, for making camp, etc., it would not form part of income from house property. It will be your income from other sources. Until otherwise there is a building which you let out for the purpose of against rental value, that won't be covered under income from house property. Mr. A transferred to her child age 34 a house property without adequate consideration. Is Mr. Is A is not deemed owner, Harendra? Yes. If there is any major child and you transfer it without adequate consideration to a major child, your relative, your brother, your sisters, your parents, your friend, relative, there is deemed owner concept does not exist. They will be treated as owner as well as the deemed owner. Clear? I told you adequate considerations mean market value of that property. That will be given in question. Okay. Prabhir Dutt, is there any difference between the right between daughter-in-law and son-in-law on lost property? That is not part of our income tax income from house property. You should go to any lawyer regarding these kind of provision. Okay. Income from sublet property taxable under which head? This point is covered in point number 6 of deemed owner, what we are going to discuss. Just wait for it. Tanveer is saying, if Mr. A gives property to his father with adequate consideration, if you have gifted property, then where is the adequate consideration came? Gift means there should not be any consideration, because the property might come back to Mr. A after the death of his father. Whatever happened after that does not matter. And first of all, if you have gifted with consideration, that cannot be called a gift. Okay, so your question is incorrect. Kindly ask the correct question. Next is Suman. If property given on rent to a firm where owner is partner, I have discussed it. Yes, it's an income from house property. In case of two owners, the building is taxable under head. That's called co-owner. The two-owner case called a co-owner. Both will be taxable. Whatever percentage, if they have equal owner, then 50-50%. If their share is different, then in that scenario, that will be covered under numerical topic. Next is, so if the employee let out the property that he got from his employer as rent-free accommodation, can the employee do so? It depends upon their terms and conditions. We cannot stop that. Priyanka is asking, sir, if the ground floor of my house is used for function and occasion celebration with consideration occasionally, then what should be for the consideration? We will take that. If you are doing it regularly as a banquet hall, that will be your business income, because that is not an annual income, not a regular income. You are giving it for an occasion, that will be your business income. So that is not the part of income from house property. Adequate consideration means fair market value. Market value, I've explained you. How many times you will ask, Ms. Mamta? So we have discussed the provision till point number 5. Point number 6 we will discuss, then we will go for a small break. Point number 6 says, person having right in a property for a period not less than 12 years. So it says, if you lease the property, leased, if you give your property on lease to someone for more than 12 years or more, then in that situation, the lessee will be treated as deemed owner. A person who acquire any right in or with respect to any building or part thereof by virtue of any transaction, as is referred to in section 269 UAF, that is transfer by way of lease for not less than 12 years, shall be the deemed to be the owner of that building or part thereof. So let me explain you, and in this explanation you will get the concept of subletting also. Suppose there is Mr. A, he has a house, he leased this property to Mr. B. Now there are two situations. If he leased that property to Mr. B for suppose 15 years, and in another case, suppose it has been leased for 5 years only. Then the point number 6 says that if you leased out property to anyone for more than or equal to 12 years, then that person also will be treated as deemed owner. So in this case, Mr. B also treated as deemed owner. In this case, he will not be a deemed owner. But what is the impact of this? The impact will be on subletting. So suppose Mr. B is paying rent for this lease to Mr. A 1 lakh rupees per month. In both the scenario, in case of Mr. A, income from house property, rental income will be 1 lakh rupees. On the basis of this 1 lakh rupees, we will solve the provision for income from house property, whether it's for more than 15 years or whether it's for less than 15 years. It does not make a difference in the both situation. The treatment in the hands of Mr. A will remain the same, but the treatment, the 12-year concept will change the treatment in the hands of Mr. B. How? It says, suppose Mr. B sublet or sublease this property to Mr. C. Clear? And Mr. C is paying rent to Mr. B for 1,20,000 rupees per month. Now, due to this concept of deemed owner, or we can say as per point number 6, what we were discussing, now this situation changed. If the property was for more than 12 years in the hands of Mr. B, so that means Mr. B was the deemed owner. So in this situation, this rent will fall under income from house property in the hands of Mr. B. Why? Because there is a building. Mr. B is the deemed owner, not used building for his business or profession. So all the conditions of charging section 22 has been fulfilled. So this house property provision will be applicable in the hands of Mr. B in this case of subletting. But if this scenario happen, in this case, this 1,20,000 would be income from other source in the hands of Mr. B because he is not the deemed owner. So in case of subletting, only in this situation, income will be fall under that income from house property if that Mr. B is the deemed owner, and he will become deemed owner if he is getting that lease for more than 12 years. If it's not more than 12 years, he would not have been a deemed owner. In that situation, the income, if he earned from the subletting, will remain under income from other source. So whatever he sublet or does not sublet, it does not have any impact upon Mr. A provision. Always the rental value will be income from house property in the hands of Mr. A because he is the real owner. But for the purpose of Mr. B, it depends whether he has a lease for more than 12 years or less than 12 years. Depending upon that, subletting provision or rental income provision will change. Any more query? If Mr. A let out property to Mr. B on rent and Mr. B also let out the property to Mr. C. So I guess Prashant, now your answer will be there because it depends upon The subletting concept of how many years is there. Okay. Santosh, okay. Swati. If Mr. A give a house to Mr. B on a rent for more than 15 years, then Mr. B called as deemed owner. Yes, we can say that, but the rental agreement should not be less than 1 year. You have to read this concept also. The exception in case the person acquiring any right by way of lease or rent from month to month or for a period not exceeding 1 year, such person will not be deemed to be the owner. So if it is on rent, then you generally might have seen the rental agreement renew after 11 months. Generally, the rent agreement is 11 months. So if there is a rental agreement or lease agreement, but the lease agreement renew after 1 year or the rental agreement renew even after 1 year, then after 12 years, that tenant will be treated as deemed owner. But if the rent agreement is for 11 months, then it renew again and again. Then the tenant will never be treated as deemed owner. So that was our theoretical part. After break, we will resume and we will resume with our numerical topic. And most of your queries, whatever is running into your brain, will be answered when we will start our numerical topic. So, Mr. Manish, can we go for a break? Okay, welcome back everyone. You must have your tea, coffee, etc. So we were discussing the concept of income from house property. So now the time for a short story. A very simple, a very short story that might help you to get some kind of motivation. So what happened? एक साधु थे और वो जगह जगह घूमते रहते थे, बहुत सारी जगह जाते रहते थे। तो एक बार एक गांव से निकले, तो उस गांव में एक जगह बहुत कंस्ट्रक्शन चल रहा था, बहुत सारे लेबर काम कर रही थी, बहुत सारे लोग। तो उन्हें बड़ा क्यूरियोसिटी हुआ कि क्या बन रहा है यहाँ पर, पता चलता है, पता करते हैं। तो उन्होंने देखा कि एक पर्सन जो काम कर रहा था वहां पर, वो उन्हें लगा वहां का कॉन्ट्रैक्टर है। तो उसके पास गए और बोले कि भाई यहाँ पर क्या बन रहा है, तुम क्या कर रहे हो? तो बोला, अरे साधु बाबा जाओ, दिमाग मत खराब करो, बहुत काम है, बहुत टेंशन है, मेरे को बहुत सारा काम करना है, बहुत सब पेंडिंग है, आप यहाँ से जाओ, इस वक्त मेरे से मत पूछो क्या हो रहा है। उन्होंने नोटिस करा कि वो जो काम कर रहा था, जो वो पत्थर तोड़ रहा था, वो उतने अच्छी तरह से फिनिशिंग नहीं आ रही थी, थोड़े क्लियर नहीं थे भाई। साधु ने कहा ठीक है। आगे पहुंचे तो एक मजदूर काम कर रहा था। उन्होंने उससे पूछा कि बेटा यहाँ पर क्या काम हो रहा है, क्या बन रहा है? तो वो भी बोला कि अरे साधु बाबा, बहुत परेशान हूँ, समझ नहीं आ रहा है, ठेकेदार ने, इस कॉन्ट्रैक्टर ने दिमाग खराब कर रखा है, काम कराता रहता है, आप जाओ, इस वक्त बहुत मूड खराब है, मैं कुछ बोल दूंगा। तो उन्होंने नोटिस करा कि उसका भी जो फिनिशिंग थी, जो वो बना रहा था स्टोन से, वो भी चीजें बहुत अच्छी नहीं बन रही थी, फिनिशिंग वॉज नॉट गुड। फिर तीसरा एक पर्सन उन्होंने देखा, एक मजदूर था जो बड़े गाने गाकर काम कर रहा था, ही वॉज रियली इंजॉइंग दिस वर्क। उसके पास पूछा उन्होंने, बेटा ये क्या बन रहा है? तो उसने कहा, साधु बाबा यहाँ बन रहा है एक मंदिर, हमारे गांव के लिए एक टेम्पल बन रहा है। तो तुम इतने खुश क्यों हो? तो बोला, मैं इसलिए खुश हूँ बिकॉज अभी हमें मंदिर के लिए दूसरे गांव जाना पड़ता है, 10-20 किलोमीटर दूर। यहाँ मंदिर बन जाएगा तो सब गांव के लोग, मैं, ये सब भी गांव के ही हैं, जो भी यहाँ काम कर रहा है, लेबर, वो ठेकेदार, वो जो आपने मजदूर से बात करी, वो सब भी हमारे इसी गांव के हैं। तो हम सब लोगों के लिए बहुत इजी हो जाएगा और हम मंदिर में जाकर एंजॉय कर सकते हैं, भगवान की पूजा कर सकते हैं, एटसेट्रा। उन्होंने कहा ओके। तो नोटिस किया तो वो जो मजदूर काम कर रहा था, तीसरा वाला जिससे उन्होंने बात की, उसका वर्क बहुत ही अच्छा हो रहा था, फिनिशिंग बहुत ही प्रॉपर थी, बहुत ही ब्यूटीफुली उसका वर्क हो रहा था। तो टेक्निकली रीजन क्या था कि अगर आप अपने काम को ऐसा बर्डन समझोगे, ऐसा हेडेक लोगे, तो काम अच्छी तरह नहीं होगा। करना तो है ही, मतलब उस ठेकेदार को भी काम करना था, सेकंड वाले मजदूर को भी काम करना था, बट वो उस काम को एज अ बर्डन कर रहे थे, इंजॉय नहीं कर रहे थे, इंटरेस्ट नहीं था उस काम करने में, बस करना पड़ रहा था। तो जो क्वालिटी ऑफ वर्क है, एक तो वो खराब होती, दूसरा आपका मेंटल पीस चला जाता है, आप डिस्टर्ब रहते हो, फ्रस्ट्रेट रहते हो, तो वो चीजें बेटर नहीं होती। जो तीसरा वाला था काम, वो भी वही कर रहा था, बट ही वॉज एंजॉइंग बिकॉज वो पता है कि ये करना तो है ही। लेकिन वो उसका रिजल्ट सोच सोच कर हैप्पी था कि जब ये बन जाएगा मेरे लिए एक टेम्पल, हमारी फैमिली के लिए, हमारे पूरे गांव के लिए, तो कितना अच्छा होगा। तो वो उस एम को लेकर काम कर रहा था कि इसका जो फ्यूचर है, उससे हम लोग को कितना कितना अच्छा लगेगा। उस वजह से ही वॉज एबल टू एंजॉय द सेम वे व्हेन यू स्टडी। So there are some students who take study like a burden. So what will happen? You won't create your interest in that. You will not going to enjoy your study. And if you're not able to enjoy your study, that will be a problem for you. So whenever you study, just imagine the future first. You, with the help of this study, with the after clearing the examination, I will be on that position. I am earning money. I am earning respect for myself, for my family, whatever goal, whatever dreams you have, you just imagine that I'll be able to complete those dreams. So if you will think about it and then start studying every day, you can think about this. Whatever your goal, whatever your dreams, write it down on a paper, write it down in a diary, you're like a checklist. And before study, you should open that checklist in your mobile phone or your written diary, etc. You will feel a different kind of energy. You will be more positive. You'll be more happy that I will go abroad. I will go to Paris when I'll be a CA. So if you'll read them and then you start your study, So that will be really give you a special kind of energy. Very positive. It work. It really work. Because I have done this when I was a student. And exactly the same thing I'm advising you that you should try that. Because you have to study whether being frustrated, taking like a burden. If you take it a burden, your quality will, of course, not going to improve. You will feel so, you will be tensed. That will affect your, of course, study part. So enjoy that. And how can you enjoy that? Just believe what is the result of this thing, what you are doing. So in the starting, we discussed the thought for the day that was the best way to predict your future is to create it. So that's time you are actually creating your future. You are the god of your own. So these books are just a path. These notes are just a path to make you to complete your goal. So be positive, enjoy your study. That's all I can say. Moving on to our provision. Let me take some queries. There are some queries regarding the questions. Okay. Will the real owner, Mr. Tanveer asking, and the deemed owner both pay tax? Yes, of course. The both need to pay tax. The real owner will pay tax and then come from house property at 1 lakh rupees per month annual value, per month value. And the deemed owner, he need to pay tax if it is under from income from house property, then taking the rental value as 1,20,000 rupees. They both need to pay taxes. Okay, Mr. Gondhi Nagabala Murugan is asking Mr. B need to pay 1 lakh per month to Mr. A, correct? And he will get 1.2 lakh rupees per month from Mr. C. So Mr. B will pay tax on 20,000 or 120 under income from house property. Look, there is a separate kind of calculation under income from house property. You cannot deduct the amount of rent you paid out of the rent you received. Like B receiving 1,20,000, he cannot deduct 1 lakh rupees, whatever he's paying to Mr. A, and he cannot tax only 20,000. It's not a business that we need to deduct purchase from sale. No, that's a different kind of concept. How we need to calculate that taxable value, we will understand when we will take the numerical part. So this 20,000 cannot be taxed. 1,20,000 will be as is it. And there is some deduction as per income from house property concept, he can deduct. But the 1 lakh he has paid has no treatment under income from house property. Okay. We will see it. Okay. Next one is Mr. Prabir Datta. I stay in Bangalore. My landlord reside in second floor. They let out first and second floor, and ground floor is being used by the landlord. Is his office one part and another part letting out for tenant? In this situation, how the tax will be determined as per case number C? Just wait, have patience. We are on our numerical part. In the numerical part, there is case number C. So your question related to case number C, I will solve it. You will understand how we need to calculate tax in this situation. Neha, positive mindset is very important, sir. I always, whenever I studying each and every subject, studying with interest, sir. Well done. And I believe you'll be really able to clear this course as soon as possible if you have interest in your studies. Okay, good suggestion. Such kind of motivation. Thank you. I have gave the page number for illustration 25. Kindly do provide solution from which page number you send. Kindly send me the page number, Deepika, right now, so I can see what page number it was. I skipped that, I guess. Illustration 25 was 24 I got. Okay. 25 is for area of salary. Okay. So for the area of salary, we have discussed a question as per the notes I have provided to you. This is page number 106. This is an area of salary question, and we will discuss in the next session. In this question, it was 3 years information has been given. Let me explain in a brief. So 10, 11, 11, 12, and 12, 13 information has been given. The salary value has given. The slab rate you might be asking. The slab rate. So these slab rate is just to explain you the provision of that year. But in the examination, the tax value, including area in these year and excluding area in these year, will be given in question. These slab rates provision will not be provided in the question, I suppose. But if even if it is there, we have to calculate as per the slab rates has been given. So I guess the tax should be the same as per the slab rate. I will do one thing. I will solve this question with an easy way to make you understand the slab rate, how it is applicable. I will upload that solution on the portal. You can see it. Even if there is any problem, even after seeing my solution, you can ask me. I will explain you. Okay, sorted? I will solve in a simple situation, simple way. Clear? Okay. Okay, good question. Mrs. Suman Goel is asking, sir, in case of minor married daughter property transfer, if house is given on rent, to whose income will it be added? Look, Mr. A transfer his house to his minor married daughter. Clear? So minor married daughter will be treated as the owner as well as the deemed owner. Now, if any rental income is earned on that house, then it will be clubbed in the hands of her husband. If he is also minor, then it will be clubbed in the hands of that person who is actually the major person of his family. So the income need to be taxable in the hands of some other person, but the tax need to be paid by that minor married daughter, because minor cannot file their return at their own. So might be her husband will file return, but even if he is minor, then some other major person like his father-in-law or mother-in-law as a guardian can file ITR return on her behalf, but the tax need to be paid by the minor daughter herself. Miss N. Mary Lynn Sobin, sir, you are a CA and that makes you compute that income under the head income from business and profession when you teach on BOSF. Does it also come under profession? That's a very good question. But that is not our practice income. That is my income from other source, whatever I am getting from it. Clear? And these kind of question is not allowed, of course. So moving on to our practical provision. Now focus. This is the main concept. Calculation format of salary was very huge, gigantic. Like we have multiple kind of things need to be added to find a solution of a salary head income. First of all, basic salary, then advanced salary, then area of salary, then multiple kind of allowances, compensations, and perquisite and provident fund. Then we have our gross salary. Then we need to deduct standard deduction, professional tax deduction, entertainment allowance deduction, and then we will have our salary, taxable salary. Even in this, there is a problem which is as per optional tax regime and default tax regime. We have to think also about that provision. So the huge format was there. But under income from house property, the format is too easy. It ends before it gets started. Calculation format, you can see, we have to determine gross annual value. First of all, we have to find out the gross annual value. That is called GAV. Out of that GAV, we need to deduct, we need to less municipal taxes paid by owner during the previous year. So there is three main point. Municipal taxes should be paid. If it is due, it cannot be deducted. It should be paid by the owner, not the tenant. If it is paid by tenant, not need to be deducted. And it should be paid in the previous year. If it has been paid in earlier year, we need not to do anything in the previous year. Balance will be our net annual value. So first of all, we have to find out the net annual value in any house property question. with the help of a format. I have written this format in detail over here. Ideal format for computing income under the head house property. First of all, we have to find out gross annual value. How we need to calculate the gross annual value, I will explain you. Municipal taxes paid by the owner. It should be paid and it should be paid by the owner. That kind of municipal taxes we can only deduct. That will be my annual value. Out of that annual value, we need to deduct only two deductions. So any other expenditure except these two deductions, if it is paid by assessee, we cannot deduct it in income from house property. As somebody was asked that Mr. A is getting 1 lakh, Mr. B is getting 1,20,000 rupees and paying rent 1 lakh to Mr. A. So can that 1 lakh be deducted? No. Only two deduction is available under income from house property. First is fixed. That is called standard deduction. That is fixed. 30% of annual value. Whatever annual value we arrived as above, 30% fixed has been deducted. Generally, in earlier years, when I was a student, there was a different kind of provision under income from house property. There is deduction of repair, maintenance, whitewash, daily expenditure, etc. Insurance was there. So it can be manipulated by the assessee, showing the repair is 1 lakh rupees, even if there is no repair. So department has done to write off all that kind of deduction and fix the limit of 30%. Suppose your annual value is 10 lakh rupees, suppose. Then for the purpose of repair, insurance, maintenance, renovation, whatever it is, 30%, that means 30% of 10 lakh, 3 lakh will be deducted fixed. Whether you have expended 4 lakh rupees in that year, does not matter, 3 lakh going to be deducted. Whether you did not expend any rupees on renovation, whitewash, etc., still 3 lakh will be deducted. So that's why I have written it's fixed. Whatever is your annual value, 30% is going to be deducted. And the second is interest on capital borrowed. If there is any loan, you have taken for that house, so the interest value on that loan value can be deducted as deduction. There will be two part of interest. One is current year interest and the other is 1/5 of pre-construction period interest. So out of this annual value, if we deduct the 30% fixed and the interest, which can be current year interest or 1/5 of pre-construction period interest, so we will have our answer, that is income from house property. So you can see it's this simple. You cannot even imagine how simple this is in comparison to salary head. You just need to find the gross annual value, municipal taxes paid, that will be given in question, standard deduction, that is a fixed 30%. We just need to do a calculation, that is for interest on capital borrowed. So there is two kinds of interest. One is current year interest and one is 1/5 of pre-construction period interest. So what is the current year of interest? That is very simple point. Current year interest means interest due during previous year. That means previous year 23-24. So if any loan outstanding in previous year, if there's any loan outstanding in previous year, so whatever interest is due on that loan will be our current year interest. Suppose there is no loan in current year. All the loan has been repaid in last or preceding years. So there will be no current year interest. So current year interest will be there only if there is any loan outstanding during the previous year. For example, if the loan amount is 10 lakh rupees, rate of interest is 10%. And in the previous year, our current year, loan is outstanding for 12 months. Then what is our current year interest? 10 lakh, 10%, that is 1 lakh. If loan this, rate this, but loan is outstanding for 8 months only, then 10 lakh, 10%, 8 upon 12. That will be current year interest. So it is a normal interest calculation as you have done in your multiple normal mathematics interest calculation. There is nothing new in current year interest. It's a very simple thing. If there is any loan in previous year, then calculate interest on that loan for the time period the loan was outstanding. Either it will be for full year or it will be for part of the year. It's a normal interest calculation. The new thing is 1/5 of pre-construction period interest. Now the word this pre-construction period denotes that interest which has been due before completion of the house property. Let me explain. Suppose there is Mr. A, it's always Mr. A. He bought a house property. He purchased a land. Suppose on 1st August 2021. Took a loan from a bank for construction, etc. Suppose 10 lakh rupees. The rate of interest is 10%. And construction started. From 1st August 2021. Now what will happen? Up to 31st March 22, construction continue, but the previous year ends on 31st March 22. So technically, income from house property says that the concept of income from house property will applicable from the year in which house property completed. So until the house property completed, the income from house property provision will not apply. So in this time duration from August till March, August, September, October, November, December, January, February, March. That means for 8 months, interest has been paid or due upon assessee, which will come that is 66667. So this much interest has been due or paid by assessee during this previous year 21-22, and the construction continues, not yet completed. So we cannot claim this interest under income from house property in this year because construction is in process. Interest deduction from house property format we have seen. There is a GAV, then municipal tax, that will come NAV, less 30% fixed and less interest. To interest current year and 1/5 of PPI. So this whole calculation will start from the year in which house property is completed. Until it is under construction, there is no income from house property provision will be applicable. So because in previous year 21-22, the construction is still going on. So we cannot apply the provision of income from house property even when we have paid the interest to the bank. We will pay the interest to the bank, of course, but this interest cannot be claimed like this until the house property completed. Clear? So technically we can say we have paid the interest to the bank, but there is no deduction of that interest has been claimed yet. We have to wait till the time the house property gets completed. Now the next year, the previous year, 22-23 came. Now in this year also, the work was in process. Construction was in process. We have paid interest again for the full year now, 1 lakh rupees to bank. Does any deduction have been claimed? No, because house is under construction. So deduction of this interest not has been claimed over here. Deduction of this interest has not been claimed over here. So we have paid 1 lakh plus 66,667, but we could not claim deduction of these interest yet. Suppose the house property has been completed on 1/9/23, or we can say 31st August 23. So our house completed on 31st August 23. So previous year 23-24, our house complete on 31st August 2023. Now the provision says the current year interest, that means 1 lakh rupees. In the year house completed, the full interest of that year, even it is completed on 31st August. So technically September, October, November, December, January, February, March. 7 months completed, but the income from house property provision says in the year the house property completed, the whole interest of that year will be treated as current year interest. We have a formula for this also. First of all, I am just trying to make understand the practical concept of it. So in the year house property will complete, that whole interest will be treated as your current year interest. So this 1 lakh will go in the current year interest format in previous year 23-24. And the interest what you have been paid before this construction, that means 1,66,667. Technically from April, May, June, July, August, 5 months also the property was under construction. So this 5-month interest should also be the part of this, but no, because the provision says the year the house is completed, even if it is completed in March 24, still this current year interest will form part of your current year interest. Whether it's completed on 31st of March, still it will happen. And the interest which has been paid in the earlier year, which has not been allowed as a deduction, will be called pre-construction period interest. As the name suggests, it's a pre-construction period interest. So this interest will allowed 1/5 every year. We cannot claim the full value in the same year. So 1/5 of this 166,667 will be allowed in current previous year as 1/5 of pre-construction period interest. So it will be allowed in 5 consecutive years from the year in which house is completed. So that is the basic, or we can say this is the idea behind the pre-construction period. So I was just trying to explain you the meaning of pre-construction period. So when I will explain you with the help of the formula that how to calculate the pre-construction period interest, you must understand the concept of it. So in an examination, you need not to calculate pre-construction via this case. It is just to explain you the meaning in detail. So you will be able to understand what is the pre-construction period, why we are calculating it with that formula, what I am going to explain you. Understood? So now we are on our formula to find out the pre-construction period. After, when I explain you the formula, you can see this slide and you can understand, yes, because of that formula, sir have explained us the concept of this. So you will be absolutely having the crystal clear concept of pre-construction period. So the provision says this is computation of pre-construction period interest. It says to calculate, because current year interest calculation is so simple. It's very, very simple. The main concept is to calculate the pre-construction period interest. So first of all, we have to find out the pre-construction period. The provision says to find out the pre-construction period from the date of borrowing. It starts from the date of borrowing and it will ending on the earlier of the following. 31st March, immediately prior to the date of completion of construction or date of repayment of loan, whichever is earlier. For example, in our question, if you'll see why the current year interest, full interest will fall in current year due to this formula. It says Pre-construction period calculation will be like this. It will start from the date of borrowing. That means 1st August 2021. It will end on earlier of the following. That is 31st March before completion of house. 31st March before completion. So completion was 31st August 2023. So the March before 31st August will be 31st March 2023. So you can see it covers this time duration. 1st August 21 automatically up to 31st March 23. So that means 1 year and 8 months. So this is 31st March 23, all loan repayment date, whichever is earlier. So in the question, loan repayment date has not been given. So we take this value. If the loan repayment date has been given, then we will take earlier of this. That duration time period interest will be pre-construction period. So 1 year and 8 month interest, if you will calculate directly in the question, it will come 16667. Understood? That was the formula. So find out the pre-construction period from the date of borrowing and ending on the earlier of the following. You have to just put this formula. You have to find out the pre-construction period with the help of this formula. The way I explained you in detail, that is just to make you understand why I am taking this value for the purpose of pre-construction period. 31st March immediately preceding to the date of completion or construction or date of repayment of loan. Whatever date is earlier will be the end date. The deduction of pre-construction period interest will be allowed from the completion year of the house. Of course, in the year house is completed, only from that year income from house property concept will be applicable. So till the house is under construction, there is no house property provision applicable. From that year only we need to calculate GAV, etc. And from that year only we can claim the deduction of pre-construction period or any other interest. Interest on a fresh loan taken to repay the original is allowed as deduction. The same thing, there is nothing new. Fourth point is very important. No deduction of PPI, pre-construction period interest, if house is completed on or before 31st March 19. This is a very important date. You have to learn it. You have to, if in the question it has been said, it has been written, it has been given that construction of house completed on or before 31st March 19, then in that question, you cannot calculate PPI. You should skip that PPI calculation. You must be thinking why? Let me explain you. Suppose you have taken the loan in 2017 for 10 lakh rupees at the rate 10%, and house construction has been completed. House construction has been completed on 25th February 2019. So from the year in which house is completed, we start income from house property provision. So technically that means from previous year 18-19, because the house is completed in previous year 18-19. So we would have applied the provision of income from house property from previous year 18-19, and 1/5 of pre-construction period interest has been allowed in 18-19. 1/5 must have been allowed in previous year 19-20. 1/5 has been allowed in previous year 20-21. 1/5 has been allowed in previous year 21-22, and 1/5, that means the last installment of pre-construction period interest must have been allowed in previous year 22-23. And for the purpose of examination, we have to solve the previous year 23-24 provision. Suppose the pre-construction period interest during 17 till this value, suppose that was 50,000. So that means 10,000 in these 5 years, 10,000 each. So this 50,000 already been claimed before our previous year calculation. So we need not to claim any deduction in previous year 23-24 if the construction has been completed up to this date. So this date is very, very important. Yes, suppose if the construction has been completed in April 2019, if this date is 25th April 19, then the first year will be this 1920, second, third, fourth, then my year will be the fifth. So I can claim the exemption. So this year is just for this, that if the construction has been completed before 31st March 19 or up to 31st March 19, that means that automatically 5 years benefit of deduction of pre-construction period has been lapsed. So you cannot claim in your this previous year because this previous year will be your 6th year. So if you calculate any pre-construction period interest and claimed in previous year 23-24, that means your answer will be wrong. Yes, current year interest can be there because current year interest will continue till the year you repaid the loan. So if the loan has not been repaid yet, current year interest can be claimed. There is no provision of 31st March 19 or any year in case of current year interest because current year interest will be there until the loan has been repaid. But for the purpose of pre-construction interest, you should learn this date very carefully. If it is an examination, it says, the question says that the house has completed up to this date, then you need not to solve anything regarding the pre-construction period interest. It's a very good thing because your calculation will be really less. If construction complete on 31st March, then preceding 31st March will be taken only. Like this, it says 31st March immediately prior to the date of completion of construction. So this is the explanation of this point. For example, if construction complete date in question is 31st March 24, then for the purpose of calculation of pre-construction period, we will take the date 31st March 23. Here is a question for all of you. It's like your homework. Example I have prepared for you. If loan taken on 1st April 2020 for rupees 10 lakh at the rate 10% and house property completed on 11th February 2024, calculate 2022, and suppose house property completed on 31st March 24 and no loan repaid yet. So you have to calculate in all three cases current year interest, 1/5 of PPI. Current year interest, 1/5 of PPI. Current year interest, 1/5 of PPI. So we have total 6 answers for this. This is your homework. When we will shut down our class today, in the next session, day after tomorrow, I will ask the answer of this question. So you have to find out the value of this question. Different cases to solve income from house property. Now that 7 case we were talking about is now in front of our provisions. So we have 7 different kind of situation to solve house property cases. One by one, I will take all the cases. Before that, let me take the queries, your questions. Next, राहुल शर्मा सिंह सर अभी तो पीजीबीपी भी आने वाला है सब टॉपिक्स की बिग ब्रदर. Why? PGP is very simple, very simple. I personally feel in comparison to salary, capital gain and PGBP, PGBP is simplest because you know most of the terms of the PGBP. In salary topic, I have to tell you first of the meaning of allowances. Then we see the implication. In salary, I have to explain you the meaning of compensation, the meaning of perquisite. First of all, we have to understand the meaning of those words. As we are discussing in pre-construction period in house property, we will discuss GAV, etc. Under PGP, we know most of all the terms meaning. Just need to understand the implication only. So PGP for me, it's technically a comparatively easy topic in respect of salary and capital gain. And I promise when I'll teach you, you will find it out. It's simple. It's very, very, very simple and very scoring also. Next. Sir, could you please explain pre-construction period interest with the help of a time scale diagram? I've explained you with the help of an example and I've given you a question. Kindly try to solve that question. Otherwise, in the next session, I will explain in detail. Fine? I'll know you will be able to solve those questions. Mamta Yadav asking, sir, pre-construction period wala interest can be claimed in the year in which the construction will be completed and पूरी amount current year में consider करनी है? नहीं ममता. Pre-construction period इंटरेस्ट हम उस साल से क्लेम करेंगे जिस साल हमारा हाउस बन जाता है. ये बात आप ठीक कह रहे हैं, लेकिन पूरी वैल्यू नहीं क्लेम कर सकते. हर साल जिस साल हाउस बन जाएगा उसमें से एवरी ईयर 1/5 दैट मीन्स 20% उस वैल्यू का हम हर साल क्लेम करेंगे. तो वो 5 ईयर्स में क्या हो जाएगा? राइट ऑफ, जैसे कि डेफर्ड रेवेन्यू एक्सपेंडिचर होता है अकाउंटिंग में. We write off deferred revenue expenditure in 5 years generally. The same way हम उसे 5 years में write off करेंगे. Is this deduction 24 applicable in both regime? Yes, it is applicable on to both regime, but as we are discussing case number A and B, interest deduction is not applicable in case number A and B of income from house property under default tax regime. All other cases like case number D, E, F, G, we can claim interest deduction under both regime, but case number A and B, we cannot claim the deduction of interest under default tax regime. It is available only under optional tax regime. So case A and B, which says self-occupied or unoccupied cases. Case A or B discuss if you have maximum 2 self-occupied or vacant properties. I explained you also that is this case in notional income basis, that if anyone in our country having only 2 houses, whether used for self-occupied, whether used for vacant property as a vacant property, the annual value of these houses will be taken as nil. So you can see the format over here. Annual value of maximum 2 houses can be nil if as self-occupied or unoccupied. Format is very simple. You need not to calculate any GAV. The first step is GAV less municipal taxes. But in case the house is for self-occupied for residence purpose or it's vacant, the annual value is fixed nil. If annual value is nil, the standard deduction, which is 30% of annual value, will remain again nil. Only you can claim the deduction of current year interest or pre-construction period interest, which will be maximum 30,000 and in some case 2 lakh rupees. When it's 30,000, when it's 2 lakh rupees, we will discuss in detail for both houses in aggregate. The maximum deduction for both houses in combined, you can claim 30,000 or 2 lakh rupees, either 30,000, either 2 lakh rupees. So maximum loss in these 2 houses can be 2 lakh. It cannot exceed 2 lakh rupees. Do not worry, we will have a solution part also. This is case number A and B. And we have the clarification also that in case of default tax regime, you cannot claim this current year interest or 1/5 of PPI interest. It's not allowed under default tax regime. How we are going to solve it? So we are talking about case number A. So A or B. A, we generally say self-occupied, both houses. B, say vacant, both houses. Or one self-occupied, one vacant. They both will solve as per case number A or B. The treatment of whether it's case A or B is same. So if you have 2 self-occupied house, this is case number A. If you have 2 vacant house, it's case number B. If you have 1 self-occupied, 1 vacant, again it's A or B, whatever it is, it's the same solution process. So let me tell you, these cases I have defined. There is not in the act. There is no, if you open the income tax book and if you find it out where is case number is, there is no case A, B, C, D, E, F, G. It's just a 7 different kind of situation for which I have made cases like A, B, C, D for your help, because when in the examination, there will be a question frame. So you have easy to identify that my question is falling in case number A. So you will remember how to solve it. My question is as per case number D. So if you are able to identify the case easily, so you know that other all cases need to not to be follow. I just need to follow that process as per case A or B or C or D. So it is just for your help. There is no as such case has been given in the act or in the study material. It is just for 7 kind of different situation question can be asked under income from house property. And let me tell you, if you are able to find out which kind of case it is, then it will really help you to solve the question very easily. So if you have 2 self-occupied property or 2 vacant property or 1 self-occupied, 1 vacant, these are case A and B. The solution is very simple. You need not to calculate GAV. You need not to deduct municipal tax. The direct annual value of these 2 houses will be nil. If annual value is nil, then standard deduction, which is 30%, automatically nil. Just need to deduct interest. One is current year interest and one is 1/5 of pre-construction period interest. That will maximum the actual value or 30,000. Whichever lower will be allowed as deduction for both, not separately. So if house 1 has 20,000 and house 2 has 30,000, total 50,000, then we can claim only maximum 30,000. But this deduction of 30,000 can extend up to 2 lakh rupees if 2 condition has been satisfied. So if assessee fulfill 2 condition, then in place of 30,000, 2 lakh will be there for comparison. The condition 1, loan is taken on or after 1st April 1999. The loan should be taken on or after 1st April 1999. So if loan is before 1/4/1999, maximum 30,000 can be claimed. So loan is taken on or after 1st April 1999 and both conditions should be fulfilled. Construction or purchase completed within 5 years from end of financial year loan taken. If these both condition has been fulfilled, then 2 lakh will be replaced in place of 30,000. So suppose if in the question it says that the loan has been taken on 1st November 2012. So first condition has been fulfilled. Now the construction of the house should be completed within 5 years from the end of the financial year loan taken. So we need to go into the end of this year. So 1st November 12, that means the financial year end will be 31st March 13. Add 5 year over here. That means if the construction has been completed up to 31st March 18, then now for the calculation purpose, we can replace 30,000 in place of 2 lakh rupees. So maximum 2 lakh will be claimed for aggregate 2 houses. If one house interest come 1,20,000 and the second house interest is suppose 1,50,000, still maximum we can claim 2 lakh rupees deduction at max. We cannot claim deduction more than that. This interest deduction will be available only in case of optional tax regime. That means if you opt out of default tax regime, only in that scenario, you are able to claim this deduction. So here we have the solution part. Where the house property used by assessee for himself, self-occupied, residential, the house property not actually occupied by the assessee, the property or part thereof is not actually let out, clarification, deduction in respect of self-occupied or unoccupied. You can claim only if you are out of default tax regime. Under this default tax regime, you cannot claim this deduction in case number A and B. Where the provision when the limit will be 30,000 and when it will be 2 lakh rupees, where the property is acquired or constructed with capital borrowed on or after 1st April 1999 and such acquisition or construction is completed within 5 years from the end of the financial year in which the loan was taken. Then actual interest payable in aggregate for 1 or 2 self-occupied properties subject to maximum of 2 lakh rupees. Where the property is repaired, renewed or reconstructed with capital borrowed on or after. If it is repaired, renewed or reconstructed, if the loan is before 1499, it's always 30,000. But if the property is repaid, renewed or reconstructed, it's for repair. If the loan is for repair, renewal or reconstruction, then the limit will remain 30,000, whether it's 1499 before or after. Deduction, you can see deduction allowed for NAV under section 15 BAC. If it is let out cases, you can claim interest deduction. But if it's self-occupied cases, no deduction under section 115 BAC. For normal scheme, optional scheme, you can claim deduction of 30,000, 2 lakh rupees, depending upon different situations. That was case number A and B. And we will start case number C from our next class. Let me take the query, then we will move on for the end of the session and we'll take the queries in our next session. In construction or borrowing and second are eligible or either one. Mr. Mohammed, the question is not clear. You are asking in construction or borrowing, 1 and 2 are eligible or either one. In construction borrowing, I'm not getting your question. Kindly ask in detail, of course. Mr. Manish Kumar, are there any deduction allowed during pre-construction period and any other provision of the income tax? No, not allowed. Prashant Gautam, so that's it for today. Yes, interest rate will be given in question. It's 10% I have taken for easy calculation purpose, but whatever interest rate it will be, that will be given in question, Swati. Okay. If there is any more query, then I can take it, or else we are going to end our session today. So case C, for multiple houses or for multiple cases, we will discuss it in our next session, of course. If there is any query, and for a minute, we will shut down our class for today. So you need to revise the provision because the next class we have to complete our case number C, D, E, F, G, and then the numerical question which has been given in our study material and the test and knowledge question also, and we will have our MCQ part also to be asked in our next session. After that 16th, we will have our PGBP provision that is going to be started. So I guess there is no more query. So we can close the section. Please take care. Have a very, very good day. Study hard and be safe. So Manishi, can we close the class?